All right, how's it going, guys? Today we're going to be doing a case study video investigating the GRAL recent range breakout. From that point, we're up about 45 to 47%, and this is the same framework that I used to trade LEU recently, which had a great range breakout right here. OKLO is another great example. Basically, what we're looking for is a low risk, high reward entry in a promising stock that when it does expand and when there's a promising market like we've had, it gives the opportunity for some great trades that we can position in either as swing traders or position traders. So again, we're going to be focusing on this GRAL case study, discussing a few different setups along the way and the overall framework of trading breakouts. And I do want to mention that I'm actually going to be doing a free webinar discussing this exact thing, going even more in depth this upcoming Saturday. And I'll have the link to the registration page in the description right now. Basically, if we go over here, just fill out your information and I'll send you all the links and associated material. You'll also get a bonus free breakouts model book and resource guide, which you can study on your own. But I promise this is going to be a great event, so I look forward to seeing you guys there. Again, the link to that is down below in the description. All right, so let's dive into this case study. First, setting the stage, GRAL is a biotech company that uses AI machine learning for early cancer detection based on their blood tests. It's not FDA approved yet. This is more of a speculative type name. But in this type of market where everything's moving, this is a great opportunity. Overall, in terms of earnings and sales, not yet profitable. It does have some revenue growth here and is a pretty small company, under 2 billion here, and a very fast mover. I'm looking at this ADR 10-day, ADR percentage here, and we're at 7.66%. So when this makes a move, it can really go. And similarly, gap downs, drawdowns, like here, are going to be pretty significant. So know what you're dealing with. This is more, for me, a swing trade type of name than something that would be more comfortable holding for weeks and months. And by the way, the setup that we're really going to be focusing on today isn't something that I'm just talking about in hindsight. This is something that I highlighted in real time that would have been the September 18th Trade Lab report right here. So again, we're going to be talking about a lot of things today, analyzing the chart, but it's important to recognize that the things we're going to be talking about are things you can learn to recognize in real time so you can catch these type of setups in the future. That's really the focus of today. Identify the characteristics, identify the setups so we can find future trades just like this one in GRAL, which has worked out really nicely. So again, just setting the standard, we're in a base, we're consolidating. There's a company that's got AI ML, which has been the hottest theme this year, especially recently. So this would be one to watch when it is in trend, because as it's previously shown, it can really make strong moves. And that's what I always look for in the past of the stock. Is it capable of making significant moves? If so, then it's something to keep an eye on to see if there is a setup like a range breakout up the right-hand side. Walking through the chart, you've got an overall gradual decline. This is really where it started to get interesting for me. You can see it's starting to form a bottoming range here where the downside momentum has lessened. We're really just going sideways. This is kind of a daily stage one in terms of Stan Weinstein's stage analysis, where it's not really making any further downside progress. You've got a lot of tightness in here, right in this area as well. In this area, that's always something that I keep an eye on when a stock's in a downtrend below declining 21 EMA, at basically setting the stage for a potential move higher and start of a move up the right-hand side of a base. And basically, that's what happened right here. We got a wedge pop through this bottoming base pivot and basically pop through and then start to move up the right-hand side of this base. This is the area of a base and where it is in the cycle that I really personally get interested in it. I like seeing a push off the bottom and then contraction back into the moving averages. And that's kind of the bread and butter spot where I like to position and look for an early entry before we actually get the base breakout. And I'll talk about a little bit later why the base breakout, even though it's kind of the standard entry, isn't necessarily the best entry because of risk reward. So I'll talk about that in just a minute. But focusing more on this first setup here, this is the Oliver Kell Wedge Pop back up through the moving averages, pushing off those base lows. And now we're tightening, now we're consolidating. and we get this tightness right here. This is what market wizards pick up on, this tightness up the right hand side. RMV, which is relative measured volatility, is basically an objective measure of relative volatility. When this goes close to zero, that suggests that there's a tight area forming. And when we get a tight area up the right hand side against the moving averages, against the 10 EMA, the 21 EMA, that's kind of the spot to really be looking for a early range breakout to position before we actually get the true breakout right here. So again, this is something I highlighted in real time. We've got this tightening action. We get an upside reversal off the 10 EMA, good sign of accumulation. And then this is really a bar that I want to really highlight here. So again, we get this tight area. We draw in this pivot in real time through those highs. That's our daily pivot. And then we get this day, which appears to be kind of a failed breakout. You get a gap up and it doesn't quite push through that pivot. It just kind of stays tight. The overall range from high to low is very tight relative, to this bar especially. Even this bar, which is pretty tight, an inside bar. Look at the range here. This might be the tightest range going back to maybe this bar right here. When we get these tight days, these are what I call kind of priming days. And a priming day could be an upside reversal. It could be a positive expectation breaker. It can be a, oops reversal, or it can be a bar like this where you get overall very tight contraction relative to recent price action. And what's key about this one is not only is it a very tight day, which represents contraction, but it's happening near a key level where we're expecting a large directional move once we actually push away from that level, either to the upside or to the downside. So whenever there's a priming day like this, which can be an inside day, it can be an upside reversal, it can be a positive expectation breaker, or a tight day like this, I'll talk about those in the free webinar this weekend. You're watching for a strong expansion the very next day. And that's what makes these type of days so powerful, is when you see them, when you're doing your daily routine, you're screening, you're going through your watch list, when you see a bar like this right near a key range pivot or even a base pivot, that tells you that there's likely going to be strong expansion the next day. And strong expansion is what we thrive on as traders, because what it does is it allows us to get far away from our entry, get a nice profit cushion if we position correctly, and ideally, move our stop above break even that very first day. So we've got that cushion to deal with so we can catch a trend just like this. If we get a breakout and there's not much oomph behind it, and maybe you've got a profit cushion at the end of the day of 1-2%, just a normal bar pulling back in could stop you out the very next day. Whereas here on this range breakout, it's up 5%, up about 4% from the range breakout entry. And that gives you kind of options. It allows you to sit with the position one more day, get more follow through. Now you're in a very strong position. You're up about 11-12% by the close. Your stop's already above break even. The 10 EMA is already above your cost basis. So it's easier to manage the trade with that profit cushion. So again, that's why I want to stress that these priming days are so powerful and something you should really key in on, because it sets the stage for strong expansion the very next day. It lets you know to be focused on it very early in the morning, because that's often when these actually break out, so you can kind of benefit and join on for this type of trade. These range breakouts are very powerful when they work, especially in good markets like we've been in, and this is a great example of that. So let's go ahead and dive in deeper into this tight day here and take a look at what it looked like in real time. So let's go over to a 65-minute time frame and scroll back here. So again, this is the bottoming action, the tightness. You can see that also on the 65-minute time frame. This is finally when we pushed above that. This was the wedge pop here, and then we see a gradual tightening, almost a mini base on this time frame. And this action right here, these bars right here, represent and are the representation of that tight day on the daily that we saw. We're basically tight, and let's measure this range here, about 3% from high to low. And often you do get a push up in the morning or even a gap down in the morning and then tight the rest of the day. That's kind of a great characteristic of these tight days here. And you can see how this is happening right near this key daily pivot. And what do we get the next day? We get the push up, and immediately we go. And from that range breakout, we're up about 4.5% into the close. So again, you get that profit cushion. But what I really want to highlight here is on the 65-minute time frame, when you see tightness like this, often there's going to be nice expansion the next day. And this is actually a good example because it highlights a lot of what we like to see. And let me actually go to a 5-minute time frame here, and let's get rid of this and zoom in here. So this is the tight day that we just saw, expansion in the morning, and then tight contraction the rest of the day. And then we often see this right before a stock forms a range breakout, where you get in the morning, this is the day where we actually broke out of the range, we get a dip below the prior day's intraday base, undercutting that level, stopping anybody out, and then we go. It's like an outside day basically, where we undercut the prior key range, and then we go. And you can see GRAL actually consolidated a little bit after that undercut, and then this bar is where we really pushed that daily pivot, and this was the true range breakout, and this is where you want to be acting on the stock. And looking at the risk, this would be under 2%. So you could easily put on a 10, 15, even 20% position, which is definitely plenty in a stock with an ADR of closer to 8%, while keeping your risk less than 0.5% of your total portfolio. So it's well within your risk parameters. Stop loss, again, low of the day. That's primarily where I like to place it. And again, you're off to the races. So you had an initial risk of under 2%. And from that range breakout, if we go and zoom out until the end of the day, like I said, you're up 4.5%. So you've got nice profit cushion. I love this trend, this steady trend over the course of the next day, the course of that day. And then even more is this follow through the next day. Immediately when you see that follow through, that's the best sign that a range breakout's really going to work. And again, you've got a great profit cushion once it pushes higher in the morning here. And you're able to move your stop up to break even above the 10 EMA on the daily chart, and it's a lot more stress-free. You just kind of can let it work. If it stays above the moving average, it's doing well. So let's go back to a daily chart here and sum things up for these first two spots here that we highlighted. So first, this wedge pop, where I also like to highlight here that it pulled into the 200-day moving average. And when you see a breakdown like this, the expectation might be that it's just going to roll over and continue down and completely, break apart, break this low, all of that, and really start a longer term downtrend. Instead, we held, push off lows here, held the next day, strong bar the next day, and then we got that wedge pop. Again, you don't have to be acting on it in this area here unless you really know the company intimately and you're just waiting for that first technical setup. But this should key you in on basically tell you to, all right, now I'm going to watch a stock for a pullback into the moving averages, a tight range up the right-hand side of the base. It's telling you that it's starting to get ready for a potential entry. So that's how I kind of decode this price action. And the other setup we talked about here, and again, the highlight is you've got a range pivot right here, which I basically drew in because you've got this tight area, and this high lines up with this high. This becomes kind of that key line in the sand where if it breaks through that, that's starting a range breakout. And then again, I really want to highlight the concept of a priming day, this tight action right near that key level that suggests there's likely going to be expansion the next day. And again, it's so important to be able to recognize this in real time because that tells you to put GRAL on your daily focus list the next day, which could be anywhere from 1 to really maximum for me 4 stocks to really focus on and set alerts on and be ready to act in the first few minutes of the day. And that's how you can catch this expansion right here, set your stop low of the day, and have a great profit cushion going into the end of the day. Nice fall through the next day and the next day as well. At that point, it's a stress-free trade. The 10 EMA, which is kind of the moving average of note for this stock during strong trends. You can see how it respected it back in this area. That is now above your cost, so that's kind of your line in the sand. Easy way to manage the position. And on this day, because this is a significant pullback, that's why you got to know what you're dealing with these type of stocks. This is a 12% pullback in 2 days. A strong oops reversal. This would be potentially an add if you're very aggressive. Back up through this low right here, on this bar right here, as we gap down. But great action, great close, and set up another kind of pivot here versus these highs. But this pivot isn't really one I'd really be looking to act upon, simply because we're a little bit more stretched in the short term, where we're away from the moving averages, we're away from the 21 EMA, versus this one was a little bit more consolidation. You have basically a week and a half of contraction here. This is just 2-3 days, but nevertheless we get a nice break through that. And then today here on this Monday, we saw the strong expansion higher, up almost 18% as we break out of this base. And this certainly was a very strong breakout. It's got everything you want to see. Strong volume coming in as well, strength off the open, and likely this is the start of a longer term trend. It could consolidate here a little bit, pull back into the level here, the base pivot, and continue the trend. But the expectation from this bar, and we'll actually have to see what happens in real time, is a start of a longer term trend. But one thing I do want to highlight is, why did we focus so much on this entry versus just waiting for the base breakout and the start of the true trend? Well, the simple reason is you've got a profit cushion going into this area where often there's a lot of volatility. There's a lot of downside reversal action, shakeouts happen in this area. Even if it does ultimately work, it's easier to sit through that noise when you've entered at a spot where it's quiet and tight, it's off people's radars, and you can easily kind of set things up so you've got a nice profit cushion to deal with that volatility that's going to happen and often happens around this base pivot area. Additionally, if you're buying this day, where's your tight and logical stop? That's something I always ask myself before I enter a name. Yes, you could set the low of the day, and that would probably be how I would handle it if I was trading this name, but that's about a 5% risk if you're buying right at the base pivot. And that's a lot wider than what we were able to manage very effectively here, under 2% risk. And that difference means you have to size differently. You can't take a 20% position with a 5% stop. That's about a 1% portfolio risk, and that's a lot more than what we had to take here. And that's if you're taking a 20% position. So just basically by logic, by math, you're able to take a more sizable and impactful position here while managing while risking less than you would be able to up in this area. And by entering here, you've got cushion going into this area where there's a lot of volatility, where if it does pull back all the way to this base pivot the next day, which it could, has certainly the right to based on its character, and still be completely healthy, you don't have to sit through that where you've barely got a profit. Instead, you've got nice profit cushion going into here, and you're just kind of watching it versus the moving averages. Those are curling up to meet the price action, and everything is acting normal. So even a normal price fluctuation for somebody who entered on this day is going to cause some heat. It's going to cause some stress, versus if you entered here where it's quiet and tight on this expansion, it's a lot more stress-free. And stress-free trades are the best ones, because those are the ones that we can sit with the entire move until it actually starts acting, abnormally, breaking down below moving averages, breaking down below ranges. That's when we actually need to exit that position. Now, if you did buy on this day and you're an aggressive swing trader, likely you're selling some into strength, because even in 3 days, you're up over 20%, and that's kind of a gift. So you could let 25% go, you could let 33% go. If you're a position trader, you're just looking to sit through the trend and wait for that base breakout and wait for it to actually break down below the 21 EMA. But if you're a swing trader, you're likely taking some off even on this day, and likely today as well. You might even be taking even more off and maybe sitting with half of your previous position, because this is a really nice move in a short amount of time. I think, again, up about 45%. But again, if you're a position trader, you're watching for a definitive close below the 10 EMA, and really the 21 EMA would be the moving average of note. But for a name like this, the 20 EMA often is almost late here. So I think the 10 EMA would be the one I would actually be using to manage the position, even for a position trader, just simply because of the character of this stock. But that's pretty much what I wanted to cover today. Again, to highlight the key concepts here, we've got the overall base cycle here, where we transition from a downtrend to bottoming action, stage 1 action on the daily, pop through the 21 EMA, and then we focus a lot on this range breakout here, this tight setup day that then sets a stage and lets you know to really be focused on this range breakout. Strong action from that, follow through the best sign that the trade is going to work, and then we talked about the benefit of entering here versus waiting for the true base breakout. At this point, the stock is a little bit maybe extended from this entry. It's just breaking out of the base here, but it's expended a lot of energy, up 40-50% in a short amount of time, just a few weeks. And again, it would be completely in its character to rest a bit, chop around, set the stage up for another consolidation like this, that then would be an add opportunity for swing traders. You could add your position back, and there's just a lot of options if we do get another contraction here. The best sign would be we get even more follow through, we get very extended, and that would show a lot of strength. Swing traders would probably be selling into that strength again. Even position traders might let some of it go just to lock in some profits, but really you'd be watching for a sell on weakness versus this moving average. All right. And again, I do want to highlight that RMV can help you spot these subtle tight areas that basically allow you to draw in these pivots. And let me walk through my process quickly to do that. So let me go ahead and delete this. So when a stock has started to push up the right-hand side, that's when I really get focused on spotting these subtle tight areas. And I'll walk through examples with LEU and OKLO in just a second. But basically a tool that can help you if you're not too trained, you haven't trained your eyes too much. And really the way to do this is to study a lot of bases. And that's what the model book that I'll be sharing free with the webinar this weekend is able to do. Again, make sure you register using the link in the description. But also what you can do is use RMV. And again, RMV is an oscillator that goes from 0 to 100. 0 means there's a tight area, there's tightness, there's a formation of a range, and tells you that you're able to draw in a line. Versus expansion is when we go up to 0, and that is what happens both on breakouts and also breakdowns, because it's expansion either way. So basically, when we've reclaimed the 21 EMA, what I'm watching for is RMV to get really below 10, but ideally as close to 0 as possible. This one got down to 3 and 5 here, and let me hide the price action. This is what we looked like in real time. And actually, let's even go. Let's stay here for just a second. This is what it looked like in real time. You've got these highs forming the top of this very short-term range, and then I look to the left a little bit and identify this key swing high as a significant level. And at that point, I can go ahead and draw in this range high. A breakout through this would mean a breakout through this mini consolidation. And what makes this even a better level is you've also got a few other key highs lining things up. This is pretty close, that high, and even looking to the left in the base, this level is pretty key high. This is pretty, very close by to that level as well. And what that tells you is when there's a breakout through this base, there's other pivots that are lining up that add fuel to the fire. You want to think of more and more participants, joining on, seeing breakouts, and adding to their positions. And when we finally get that, if we go one day further, this kind of reconfirms the range we tried to push out, failed, and then had demand off lows. This actually primes it even more. And then we get one more prime day where we get a subtle breakout, but really it hasn't broken out of that range just yet. And this high is another pivot that you can add to the fire. All these pivots are lining up here. And then this is the day to act. This is the day to act on strength right in the morning as we start to break through the earliest pivots. And great to see a strong close on that day as we close above all these pivots right here. So it's always good to see all these pivots lining up together. Again, that adds fuel to the fire. And then we get the nice follow through. Things are stress-free. And at this point, we're watching and looking for a base breakout. We're anticipating that. We're holding our position. The 10 EMA is above our cost basis right here. And we're just watching it versus that moving average. We get more consolidation, pull back in the 10 EMA, perfectly normal. Nice action, more signs of demand. This is kind of like this bar right here, this upside reversal. We get a breakout from that. Nothing much to do if you own it. And then strong expansion here. Again, only thing to do really would be let some go if that's your style, if that's your time frame, all of that. So that's kind of a walkthrough of this process. And again, this is something we recognize in real time in the trade lab, looking for a range breakout right from this area. So I also want to highlight, let's go to OKLO. The same process works on all bases, and this is kind of my standard setup. We've got a consolidation. This is kind of a base on base even, because we can draw in this pivot here. And this, as soon as we're about here where we're consolidating below this key high, this becomes the start of another base. This base isn't too stretched from this base right here, so it kind of is one compound base. And basically what we're looking for is a reclaim of the 21 EMA and a tight range. And this would be a little bit early. The base isn't quite mature yet, but we break back below the 21 EMA. And then this is where it gets really interesting. We're right at that key moving averages, the 21 EMA as well as the 10 EMA. Yeah, these two highs lining up. RMV is going to 0, telling you that you can draw in a pivot. You look for highs lining up. These two highs line up completely, and they also line up with the 21 EMA. So it's kind of like that pivot concept, but with the moving averages, and you're watching for a breakout through that level, also popping through the 21 EMA. And look at this bar. What is this? This is very similar to the tight setup day that we talked about. And we're watching for a breakout expansion through that level. That's what we get. Strong action. Don't get quite as much expansion on that first day as we did in the prior example, but still we're up 4.7% on the day. A nice action off the open. It got some profit cushion. And then the next day, we do have a little bit of a downside reversal, but honestly, it's more of a tight day. This is pretty tight relative to the ADR. Again, this is a pretty volatile name, about 11%. Next day, it reconfirms. And at this point, it becomes stress-free. And what's great is that because this range happened right near the 21 EMA, it's so easy to manage the trade versus that level. You can manage your risk against that. As soon as the moving average is above your cost basis, you're watching for a close or two closes below that moving average. That's the great benefit of entering close to the moving averages, is that it makes the position management really stress-free. And from that point, it continued higher. The moving averages are above your cost basis, and we get the range breakout, or sorry, the base breakout after it. Again, you could even sell some into strength if you're a swing trader, and just tightening up again. So watching for reconfirmation through these highs. RMV goes back down to 0, showing this range here in real time. Breakout, so acting textbook, and even more. And now we're pulling back to the 10 EMA, doing nothing wrong, but a little bit of distribution. You've got this gap down to worry about. This could be the start of a more significant consolidation, and you'd be on guard if we broke below these lows, and definitely below the 21 EMA. And if your sell rule was below 2 closes below the 10 EMA, you're watching for another close below here. Or if it's the 21 EMA, you're just watching this level and, you know, have kind of in the bank about a 42% profit, which is excellent. And if it keeps shredding, if it keeps trending, that's great. If it breaks below it, no problem. It's already a great trade, and that's the way to go. So let's bring up LEU as well. This is when I traded this range breakout right here. Again, called this out in the trade lab. In terms of the setup, you've got a base, you've got a tight contraction, tight setup day, RMV close to 0. It's 0 right here, and then gets even tighter with this upside reversal. Again, not just tight days can be those priming days, but also upside reversals where the open and close ideally are about the same level, and we get demand off the low. So it pushes lower, and then they accumulate it back up and close it tight right near that pivot right above it. That's what happens right here. This is the pivot, and you're watching for a breakout through that. Entered on this day, range breakout shortly in the morning as it pushed higher, and acting fine, just kind of going sideways after this range breakout. Another tight day, so relatively tight, watching for expansion higher. We'll see what happens, and we get that expansion higher reconfirmation. I love seeing expansion, contraction, reconfirmation as it makes its way towards its base pivot. At this point, the 10 EMA and 21 EMA are above your cost basis. I was watching the 21 EMA. It consolidates again, pulls back into this range pivot, but holding above both the 10 and 21 EMA. And we reconfirm one more time, base breakout, and we're off to the races, and get a nice oops reversal here as well as we continue to trend above the 10 and 21 EMA. So that's, again, another example of the range breakout. All right, so hopefully this video wasn't too long. Hopefully this is helpful to you guys. Let me know, which part was most helpful to you. I might do more of these kind of case study videos if you guys enjoy it. And I want to stress that I'm going to be going very in depth into this process again in the free breakouts webinar that will be this weekend. Again, the link to that is in the description. It's also popping up right now. Completely free. You'll also get the breakouts model book, which will allow you to kind of train your eyes to spot these areas, these early entries in real time, and know exactly where to manage your risk against, and also how to manage the position. So thanks so much for tuning in. Hopefully you guys enjoyed this. Leave a like down below if you did. Subscribe if you're new to the channel. If you have any questions, comment it down below. And hopefully I'll see you guys on Saturday at the Breakouts webinar. I look forward to seeing you there. And yeah, see you there this weekend. Take care.